Hello, everyone. I'm Jared Hall. It's Monday, January 6th, 2025. Welcome to our first week ahead video of the new year. We hope everyone had a Merry Christmas and a Happy New Year. Before we unpack the events that will be impacting the markets this week, let's briefly review the market's action to close out and start the new year. The market has taken two quick pullbacks since our last video, the first occurring just before Christmas and the second leading into New Year's Eve and the first trading day of 2025. Both declines were approximately a drawdown of roughly 3.6% from all-time highs. This volatility led to the S&P 500 closing out 2024 calendar year up 23.3%, but down 2.5% for the month of December. The declines around the start of the year were primarily a function of rising interest rates, valuation concerns, and a pullback in consumer confidence. Last week specifically, the market index ended the week down 0.5% as the materials and consumer sectors declined, but losses were held in check by positive gains across energy and utility stocks. Let's look ahead to this week and then briefly touch base on themes for 2025. We begin the first full week of the year with the shortened trading week as the U.S. stock market will be closed Thursday in honor of President Jimmy Carter's recent passing. Outside of that event, we will have the release of December employment data with ADP's monthly employment report expected on Wednesday and the Labor Department's employment report due on Friday of this week. Touching on some themes for 2025, we think the market will be again keying on inflation paired with an easing of global monetary policy. Rates were elevated through 2024 as the fight against pandemic-led inflation remained even after 100 basis points of rate cuts by the Fed. This too will change some for 2025 as policy rates are set to decline, albeit slower than initially projected. The U.S. Federal Reserve is projecting to have two 25 basis point rate cuts in 2025, when once there was as many as 6 projected rate cuts. The second key theme for this year will be the impacts of Trump 2.0 across the United States and the anti-establishment trends that are occurring globally. With Trump 2.0, the markets are digesting the possible benefits and drags of tariffs, decreased regulation perhaps causing a spike in deal-making activity, and whether federal deficits will increase or flatline as counter trends of the Department of Government Efficiency and sunsetting tax cuts are set for expiration in December of this year. Perhaps the theme that carries the most certainty for this year will be the impact and adoption of artificial intelligence. We think companies will continue to make large capital investments to advance their AI capabilities and also will experience large productivity gains as they deploy tools to create more efficient workflows. With this theme, there will also be the need for large power production across the United States to drive power needed to supply these AI workloads. The stage is set for a boon to economic growth, with the largest looming risks being valuations, geopolitical positioning, and monetary policy shifts. We think that short-term market dislocations could occur this year, but that the tailwinds of growth may be too strong to deny. The key for investors will be protecting gains they've experienced through 2024 by creating portfolio resiliency and not getting too greedy. That's all for this week. Be sure to follow along with us for more content like this.